last few days since the market has sort of gone up, reaction gone down and moved sideways. And my sort of opening question the last few sessions has been, is this market confused?
Yeah, I think so. I think, certainly as an analyst trying to keep track of OPEC plus meetings, it's been pretty confusing where the writing was very much on the wall ahead of it, that they wanted to be rolling over their production levels, that they were concerned about demand. And then we had this surprise where they announced a roughly 2 million barrel a day increase by July, and the market responded positively to that. And then perhaps after a weekend of too many Easter eggs, came back down when we had the open on Monday. And then over the last couple of days has been back and forth trying to find some direction. We might have perhaps got a little bit last night with a pretty optimistic outlook, I think, from the IMF, where they revised upward their global growth projections, but also some big upward revisions to their GDP forecast for countries like the United States. China less so, but still upward. At least, and India got a big boost as well. I think that's very much worth bearing in mind, given the scale of coronavirus cases we're seeing on the rise up in India at the moment. I think the near-term outlook for India looks quite tight, or quite hazy.
Ed, just to follow up on that, these sort of revised forecasts. They also, I mean, on the oil demand recovery side, we've seen a continuous revision. On the sort of macroeconomic side, OECD, World Bank, IMF, significant revisions. Why are we seeing such significant revisions? Why is it so difficult to make these forecasts? And can we expect even more revisions the next time?
Yeah, well, I think we're dealing with a more than a once in a century type of extraneous economic event. So nobody had a Bloomberg terminal in 1918 when we were dealing with the Spanish flu. So being able to model, take from that and model onto the status of the current economy, how we would expect to see a rebound, I think would be pretty tricky and probably pretty foolhardy. So I think we are, in a way, everybody who's having to become or do economic forecasts is trying to become a virologist or epidemiologist as well, and now a vaccine specialist. So I think the issue is when a lot of the outlooks for 2021 were being set, it was presuming that, okay, we were learning how to deal with the virus better under the existing frameworks that we had. So social distancing, keeping things on lockdown if things got out of control. But the success that some economies have had in rolling out the virus with some speed, particularly the US or the UK, that's probably come as an upside shock to forecasters and to markets this year. And hence, there is this kind of element of I sort of liken it to like a coiled spring, if you would, that once you get sort of a critical mass of vaccine being deployed across an economy and people feel confident to go out and want to spend, if they had that pent up saving, they are probably going to do it now if they feel quite confident they're not at risk from some kind of public health crisis anymore.
I suppose that's the big unknown, is how spring loaded and how far that will rebound back. Kate Durian, Mies contributing editor, non-resident fellow of the Arab Gulf States Institute in Washington, but sitting in London. Kate, welcome back to the table. Your thoughts now, 5 or 6 days after OPEC's latest decision, and I'd welcome particular insight on whether you think it was demand driven or fear of other supply driven.
I think it was predominantly demand driven. I mean, basically what they've done is they've come back and there was a gap, between supply and demand that they've now closed. I think what we're going to see now, and possibly because the market is holding above 60, is that people expect supply to be quite tight. And now that you've got the IMF up raising its estimate for global economic growth, particularly in the major consuming countries, that I think has had an impact. The weaker dollar, the fact that Chinese growth is healthy now. Even in the US, for example, even though the guidance was for people not to travel, a lot of them are traveling. You saw the photographs at the airport. So I think people are beginning to feel a bit more confident with the vaccine rollouts. Of course, that doesn't mean that it's universal. I mean, what I think the that the Saudis were talking about at the OPEC meeting is that it is still very uneven recovery. There is still need for caution, and that's why they're meeting again in April. So I think what they've created is a pathway that goes all the way out to April 2022. So the market has some idea of where we're heading on the supply side. Demand is always going to be a bit more difficult to predict with any accuracy. So I think, yes, it was probably the right decision. We are seeing signs that US production is rising, but not by that much. I mean, in fact, it's going to be, the EIA, I think, has lowered its estimate for US production growth. China's coming back from refining maintenance. So I think the positives are there, but there is still need for caution.
Let's bring in our correspondent in Los Angeles, who we've sent all the way to Hollywood, Frank Kane, senior business columnist at Arab News, the largest English language daily. In LA this morning, or this night, I should say, or last night even, Frank, what does it feel like on the ground? I mean, we are seeing, and obviously Ed's mentioned, IMF have revised upwards the big spring in the US recovery. We saw it a few weeks ago in the OECD World Bank numbers. Does it feel like that on the ground, that this is an economy that is on its way springing big time up?
Well, Sean, I think, from I'm in LA, I'm in California. That's not the whole of the US economy, but it is perhaps the most vibrant case of the US economy, if you like. And I think the feeling here is pretty optimistic. Governor Newsom announced today that half the population of California, some 20 million people, had received the vaccine. June the 15th is when California as a state reopens again, with some caveats. Mask wearing will continue on an advisory basis. But fully
what is its current protocols? Is restaurants open, not open, or schools?
Open outside, closed inside. Schools, well, certainly when I dropped my granddaughter off at her nursery this morning, it was open. I think there was a fair amount of social distancing going on. But kids are going to school. And there just seems to be a buzz, that I wasn't really expecting, I've got to say. There were long trailbacks on the freeways this morning. I was driving around. So, people are using gas again, and lots of it seems, almost back to pre-COVID levels, people here tell me. So there is a buzz for sure. And, the flight over, Emirates flight over last week was, I would say, less than 50% full, but that was quite pleasant, actually. That
was direct to Los Angeles?
Yeah, that's right. Yeah. So, but that means that some people are willing to take that risk and are making that journey again. The airport was quite busy. I wouldn't say packed, I wouldn't say hectic, but quite busy. So all the numbers seem to be going the right way for California, certainly. One small cloud on the horizon that anybody reading the LA Times would have picked this up this morning, was that they're talking about a double mutant variation of the virus, which they've picked up some
in California.
Yeah, it came from India originally, apparently, but they've now picked it up in California. Some scientists at Stanford have detected it here. They're not quite sure, what to do with it, how it responds to vaccine. So, that is a little cloud.
And one would imagine that will continue to be the sort of don't get too ahead of your skis in this recovery. Ed, in any of the data and the forecasting that you're seeing out of IMF and World Bank and others, very bullish, very optimistic, is it based on that we're just getting so good at living with COVID, but COVID will still be there and we're still going to hit all these growth numbers? Or are they caveating that, we might have this very ugly, as Frank described, double mutant? It sort of sounds like a space program. But where are these forecasts accounting for those possibilities?
So I think they did outline that we are still sort of in the middle of the pandemic, and that there is, as they said, a lot of uncertainty about their forecasts going forward. So the risk of new variants of the disease spreading certainly presents a downside risk to it. But I think what they are counting on is that, one, we've had, yes, vaccines being deployed, and we get that sort of coiled spring effect from consumers in some economies, basically the US, going out and spending, but also that governments who have the fiscal flexibility or the space to do so maintain a very accommodative stance, whether that's in monetary or fiscal policy. So really cautioning against anybody pulling back on the fiscal levers too quickly. And I think probably encouraged by the kind of spending that has been announced in the United States. We had the American Rescue Plan earlier this year, the 1.9 trillion, and then now we are talking about the American Jobs Plan, which could be potentially larger, but spread over many more years, which is the infrastructure plan, potentially up to over $2 trillion.
Ed, what we're also hearing increasingly is taxation starting to come into the conversation. We saw out of the British government recently plans to raise corporate tax to pay for all of this largesse, individual wealthy tax. What does that, do you think, mean in particular for the Gulf? If I was on the local radio station, this is the question I'd ask you. What does it mean for me? But I mean, typically there's talk that the likes of Dubai and others could benefit from the wealth austerity in the West as people move away from that. What are your thoughts about that as a solution and its impact on other markets?
Well, certainly, yeah. I mean, I think governments are now doing the sums and trying to take account of how do they pay for the extensive kind of largesse, whether that's been furlough schemes or infrastructure plans that are being announced. How do they account for those and pay for them going forward without putting too much of the burden on the debt stock, which has been the way they've done it largely so far. In terms of whether or not the UAE could stand to benefit as, being the tax-free haven, I think we actually have seen some initiatives being taken. So, for instance, here in the UAE, there is this kind of remote working visa that they have now launched. So effectively, you could do your job wherever it is in the world, be it London, be it New York, or wherever, but you could be based here in the UAE and have access to, basically the right to live and operate here. Even though you're not necessarily
without the burdens
for a domestic organization.
Kate, the other big challenge facing the OPEC decision is the amount of unknown supply coming out of Iran. We've had multiple reports, including, I think, from your own publication at MEIS, about where that, and generally the number seems to be around 1 million barrels a day. My question is ultimately around the talks that are taking place in Vienna this week, the talks about rehabilitating the Iran nuclear agreement. Given the million that's already going to the market, does that sort of downgrade the significance, at least in terms of the oil markets, of what happens in Vienna this week?
I think it does matter, but when the question came up at the OPEC meeting, and Prince Abdulaziz bin Salman, the Saudi energy minister, said, if the numbers are correct, because nobody really knows, some of it is surrogate barrels, that are disguised as barrels coming from, originating from other countries. So you don't really know the number, but I think our figure was somewhere around 900,000, mostly going to China. They're not really getting the money, but Prince Abdulaziz was saying, well, if true, then it means that the market has absorbed these barrels. Of course, there is additional if the sanctions are removed, but I mean, my opinion is that it's not really going to move that quickly. They're still at initially indirect talks. Yes, there is always a hardening of positions on both sides, particularly on the Iranian side. They have this habit of dragging negotiations out. You have elections coming up in June in Iran, so I think the Biden administration is probably starting negotiations, but won't really want to rush them until after the election to see whether the hardliners or the more moderate factions.
But is that not the other way? Potentially, one could look at that the other way around, if in essence that the window to do a deal as it currently stands is very narrow, because if you don't secure or reactivate the deal that you already have in the bag, if the hardliners get in June, and which all indications are they're looking likely to do very well, that the long, hard-fought time that for the JCPOA could be lost. So really, this is the moment to secure its return.
That's one way of looking at it. And obviously, the more you delay, the more there's geopolitical risk, because there are a lot of people in the region, a lot of countries in the region that were opposed to the original GCPOA. So it's very difficult to see how. It also depends very much, I think, on the Iranian side of whether it goes through, because they're insisting that all sanctions have to be removed before they come back. I mean, I think they may have narrowed the differences, because the noises coming out of Vienna yesterday after the indirect meetings were quite positive. So
it's hard to imagine they'd let it collapse out of the semantics of choreography rather than substance. Frank, I've been reading in your paper, the Arab News, that the op-ed pages there have been relatively supportive of the recovery, of the return to this, with the caveat that America will defend all the interests of the region and so forth. I'm just wondering, from your thoughts on the coverage that it's getting, do you think that the Gulf states will support and facilitate the Americans, or will they resist? What's your sense on that?
I think it depends how far the Americans go on other aspects of the relationship with Iran. I think Saudi Arabia, for example, is less bothered about a glut of Iranian oil coming on the market and upsetting OPEC plus maths than it is about the money that the Iranians will get from that oil and what that's being used for. The various other little excursions that the Iranians have around the world. Saudi Arabia now is more worried about the prospect of rockets coming from Yemen and Iraq and South Iran, than it is about extra oil barrels. So I think that they want to insist that the Americans put really strict conditions and really tough sanctions on Iran and their little peripheral escapades, if you like, in Syria, Yemen, in particular Yemen. That is the Saudi priority at the moment, I think.
Yeah, that's certainly one to look at. Ed, your thoughts on the decision that OPEC has made, given the nature of things, we're always only a few weeks away from the possibility of a change. OPEC Plus did decide last Thursday on a 3-month agreement, essentially right out to July. Last year, they kind of had abandoned that sort of over the time horizon thing, because they meet every month anyway. And it sort of puts that 3-month idea into question every time. Your thoughts on why do you think they moved away from month to month and went to a 3-month, and how significant is that from the point of view of volume of new supply?
Well, I think it is considerable in terms of the volume. So we had been projecting forward from the levels that they announced for March, that they would have those kind of tight barrels for basically the first tight level of production for the first half of the year. And that meant that in Q2, we were expecting to see a moderate deficit developing. Now, with the increase of the OPEC plus countries, as well as Saudi Arabia unwinding that extra 1 million barrel a day cuts, we see the oil market closer to being about balance. So it is significant in terms of the changing narrative. I think generally, though, the idea behind the entire agreement was that the cuts were going to be tapered going forward in terms on signs of demand returning. And it's not going exactly to schedule as per the agreement that we had signed about this time last year, but that it nevertheless is kind of following the rules, or following the order of it. I think there may also be a little bit of an element, something we've seen consistently is this kind of pushback and grumbling about the level of production allocations that individual countries are getting, and why producers like Russia and Kazakhstan, for instance, in the past few meetings have been allowed to have monthly increases, but nobody else has. So by, in a way, giving everybody this extra breathing room over the next couple of months, at a time when oil prices are quite accommodative and quite supportive for most OPEC plus economies, you can kind of get around the worry that anybody would be cheating at the edges, and sort of give everybody the room to expand and not sort of have the awkward kind of diplomacy that we saw over a couple of months last year when some producers, like here in the UAE, were producing beyond or failing to hit their production cut targets.
Kate, the discussion of the return of Iran barrels and the return of Iran on the geopolitical scene with the nuclear agreement, in either case, are we ignoring the geopolitical risks? I mean, it seems the markets is not in any way accounting for. I mean, as Frank I think mentioned, we're literally seeing rockets land from Yemen, right on top of energy oil infrastructure out of the biggest exporter in the world, and yet markets are oblivious and ignore these things. We're seeing in eastern Ukraine some very rising tensions with Russia going into the summer and so on. You're wondering your thoughts on that. Why is this market completely oblivious to these geopolitical risks, and should they be?
I think it's partly to do with the fact that, previously up until now, we've seen, more supply, weak demand. So the market's quite relaxed, stock levels were pretty high. You had a lot of spare capacity, spare production capacity. Of course, most of it is in Saudi Arabia. So you would think that there's some geopolitical risk, but, the whole geography of oil trade has changed. It's looking more to eastward. That's why the Suez Canal blockage didn't really have that much of an impact, because, the flows have changed. I think it's partly to do with the market situation, but also the fact that there is a lot of spare production capacity. You've got the US that is exporting, you've got Russia, which is capable of exporting, both ways, to Asia and to Europe. So I think geopolitical risk has somehow become less of a factor in the market. There is a bit of psychology, obviously, and I think that's one of the reasons why prices are staying above 60. But it doesn't seem to have as much play as it did previously.
Let's go to the room's view on that, on the geopolitical risk question. I mean, we are sitting on daily reports on face-offs between China and all of the US allies in South China Sea. We're seeing increasingly hostilities in Eastern Europe, and obviously Ukraine being a significant one. Here in the Middle East, obviously the rockets coming in from Yemen into the oil infrastructure, and yet there is no recognition of that risk by the oil market. So my question is, should the market be factoring in geopolitical premium in the oil price? Yes or no? Frank, the Prince Abdulaziz has become famous now for many reasons, but one is that he has successfully surprised the market 3 times in a row. We have our interview this week, which will be published in 5 minutes, with Halima Croft, who describes him as the Greenspan of the oil, the central bank, where Greenspan, you were always wondering what he was going to do next. Your thoughts on that strategy continuing, and given that, what could be some of the surprises yet to come?
Yeah, he would like that analogy, I'm sure, because the idea behind the monthly OPEC Plus meetings was exactly to mirror the way that the Fed worked and that central banks work with their monthly meetings. He said this expressly in the beginning when he brought them in. And he has made a great thing of the risks of trying to predict, the oil price and oil markets in these circumstances. So I wonder whether what is in effect a 3-month deal. I think it can be rowed back at monthly meetings, can't it? And there are monthly meetings between now and July.
Well, the next one's on the 30th of April. It's not even a month.
Well, yeah. So in theory, that could change the whole thing, I guess, couldn't it? So the elements of unpredictability, which he has quite carefully cultivated, is still there. He could pull it all back. I think essentially here they quite like to have oil between 60 and 65, and if it stays around there. And it takes a little bit of posturing, a little bit of gamesmanship to keep it there, then, why not?
Ed, on that point, while keeping it in that range, but still with this great uncertainty around it, is that enough to keep the shale oil producers on the sidelines, or because of the uncertainty? And is that sort of the target, you think, of this strategy?
Yeah, I think it's a question of how nimble a lot of those guys can be in terms of getting access. You know, with shale, it's not necessarily a matter of access to material. It's really access to capital that prevents the growth of the industry or the recovery of the industry. So if there is an outlook, though, that oil prices are stable at between, let's even give it a wider range of, say, $50 to $65 a barrel, I think there's probably been enough innovation and enough cost cutting that's happened in a lot of those sectors that there are people that be willing to do capex at that kind of level. So it does encourage the OPEC plus policy of keeping some of the output off will encourage recovery there. The question is when does that come back in, and is it going to actually function as what it should be doing, which is the kind of sort of peaking demand level of output that it should be doing, the higher cost producers compared with the kind of baseload suppliers we have here in OPEC plus. So, we're still of the view, we've long held the view that ultimately the OPEC plus strategy of keeping output basically just feeds you into these boom bust cycles and allows alternative producers to come in, chip away at market share, and adds to price volatility rather than actually eroding the volatility in markets.
Let's get this survey result and give Kate the last word today. Should there be a factoring of geopolitical premium? The oil price looks kind of like nearly a 50-50 vote there. Ignore it at your peril, I suppose, to a certain extent. Kate, looking forward to the week ahead or the rest of this week, what will give this market direction, do you think? At the moment, it's after its initial reaction to the decision by OPEC plus, it's sort of settled in what at least is nearly a no breeze. There's no wind in the sails at the moment. What's out there? Even the big news from the IMF, as Ed mentioned, the market did sort of spit that hook out. No big deal, big growth in America. I don't care. I'm not going up on the back of that. Where's direction going to come from, do you think?
Well, again, it's all driven by Asia. The US is no longer a huge importer of oil, particularly from the Middle East. And I think people are going to be looking at interest rates. They're going to be looking at the impact of the stimulus packages, whether that's going to lead to inflationary pressures. The Iran talks are an issue. The maneuverings in by China. I mean, there's a lot to take in. The Iranian talks, but I think basically I agree with Frank that the OPEC Plus agreement isn't written in stone, so it could be tweaked. And I think it does, because you have a sort of a roadmap now. It does take out some volatility from the markets. So.
I mean, just to wrap up on that point, the Iran talks this week, although one could say that nothing substantive could come out of them, but one thing that it could deliver is a bearish sentiment that they're on a pathway towards some kind of an agreement, the potential for Iran to continue to either export outside of sanctions will be tolerated, or that sentiment could really guide on the downside, I suppose, from the point of view if it signals more Iranian barrels. So one to watch, the talks in Vienna. Kate in London, thank you so much for joining us this morning, bright and early. Not as early as last time with the hour change, but thank you for that. Frank in LA, enjoy the time with your grandchildren and enjoy your stay there. The great thing about the digital nomad, you can work from anywhere. So enjoy that. And thanks for staying up late and joining us this evening or this morning. Ed from Dubai, always from Emirates MBD, thank you so much. All the best, everybody. We'll catch you during the week each morning at 10:30.